In this video, I'm walking you through 18 stocks, and for each one I'll tell you whether I'm bullish or bearish heading into earnings, and more importantly, why. Stick around until the end, because there are a few names in here where I think the market has it completely wrong. As always, this is not financial advice, this is my personal view. First up, my bearish view on AST SpaceMobile. Why? 3 reasons. The timeline keeps slipping. The company pushed the expected completion of its launch campaign to early 2027, after previously promising 45 satellites in orbit by the end of this year. The second reason is that dilution is relentless. The share count is up more than 50% in 1 year. Third reason is that the valuation price is perfect execution. A market cap around $23 billion against full year revenue guidance of $150 to $200 million. That's over 100 times this year's sales. At that price, positive operational updates aren't upside. They're the bare minimum, and the market knows it. Nearly 17% of the shares are sold short. Next up, we got Supermicro Computers, a very controversial stock. Everyone knows the mess. The accounting drama, the crashed share price, the trust that evaporated. But that's exactly why expectations are now low, while the business just keeps running. Demand for AI servers is bigger than ever. Supermicro leads in liquid cooling, critical for the newest NVIDIA generations, and the global data center build-out is nowhere near finished. Low expectations plus a massive market plus a technological edge in cooling. That's a cocktail I'm happy to hold into earnings. Margins remain the risk, but the upside on a strong guidance number is big here. Next up, we got Bitdeer Technologies. Pay attention, because this is a contrarian call with Bitcoin under pressure. That's exactly why I find Bitdeer interesting. They developed their own seal miner chips, structurally lowering their cost per Bitcoin and creating a second revenue stream by selling to third parties. And on top of that, they're converting their massive energy portfolio toward HPC and AI data centers. Power plus land plus permits, that's exactly what hyperscalers are lining up for right now. Every new AI hosting contract announced on this call could trigger a re-rating that's completely independent of the Bitcoin price. Next up, we got Rocketlab, and I'm going in bearish. I know I'm gonna make some of you angry with this one. Beautiful company, great execution with Electron, strong space systems division, but the valuation is running miles ahead of the numbers. The entire share price hangs on one thing, Neutron, and rockets have one annoying habit. They almost always get delayed. If management even hints at a shift in the Neutron timeline on this call, we're talking about a stock that can correct very hard at these multiples. Electron margins are thin, profits aren't there yet, and expectations are sky high. I'll keep following the long-term story, but before these earnings, bearish. Next up is Nubank Holdings, and I'm fully bullish. Honestly, the easiest call on this entire list. This is one of the very few hypergrowth stories that's also solidly profitable. The customer base is growing toward a third of all adults in Latin America. Mexico and Colombia are only now really starting to contribute, and return on equity ranks among the highest of any bank in the world. And the best part, despite all that growth, the valuation is simply reasonable. You're not paying an AI premium here, no hype premium. You're paying for a profit machine that adds millions of customers every single quarter. Next in line, we have Valens Semiconductor, a microcap almost nobody knows, but one I'm bullish on. 3 reasons. 1. The automotive design wins with their in-car connectivity chipsets are starting to translate into future revenue. Cars are getting more cameras and sensors every year, and all that data has to move through the vehicle. 2. The Pro AV market, their bread and butter, is recovering after a weak stretch. 3. And this is crucial with microcaps, the company sits on a fat cash position covering a large chunk of the market cap. That limits the downside. Next up, Coreweave. Don't get me wrong, the revenue growth is spectacular and the backlog is enormous, but that's exactly the problem. Everybody already knows that. What the market underestimates, interest expense is eating the margins alive. CapEx keeps exploding and customer concentration is massive. A handful of big AI players drives virtually all of the revenue. With expectations this high, a strong revenue beat isn't enough. If margins or guidance disappoint even slightly, or another financing round with dilution shows up, this stock drops hard. I do not want to be holding this going into these numbers. The next stock that is reporting earnings is called Gorilla Technology, and I'm very bullish. This is another non-US stock on the list. Gorilla keeps winning one major government contract after another in AI infrastructure, security, and smart government. The backlog has exploded in a short period of time, and management has raised guidance multiple times. If even part of that pipeline converts into recognized revenue this quarter, this stock can move hard. The risk is obvious. Government contracts are slow, payments come late, and revenue is lumpy quarter to quarter. But at this valuation, with this pipeline, I think the upside outweighs the downside. For the next stock, I'm heading bullish into earning, and the stock is called QXO. You're really buying one thing, and that is Brad Jacobs. This is the man who built XPO, GXO, and RXO, and delivered shareholders thousands of % in returns. Now he's running the same playbook in building products distribution. A fragmented market worth hundreds of billions, consolidate through acquisitions, and improve margins with technology in a sector that's decades behind. The big acquisitions are done, integration is underway, and every quarter we get more visibility on the synergies. This isn't a one-quarter stock, which is exactly why I see weakness around earnings as a buying opportunity rather than a reason to panic. The next stock that is reporting earnings is USA Rare Earth. I'm slightly bullish on this one. Why only slightly? Because the numbers themselves barely matter here. This company is still in the build-out phase. What actually matters are the updates on the magnet plant in Oklahoma and the mine development in Texas. The macro wind is fully at their back. America wants independence from China for rare earths and magnets at any cost, and Washington is throwing subsidies and strategic deals at the problem. Any company that can build that supply chain on US soil is sitting on gold. The risk, pre-revenue means dilution, and it's guaranteed to come. That's why no full position, but the direction is clear. Next in line is Keel Infrastructure. This stock has gone up quite some bit for a good reason, but is right now pricing in some years of perfect execution and little dilution. But here are the facts. Revenue is expected to fall more than 50% year over year because the company is right in the middle of its pivot from Bitcoin mining to HPC and AI data centers. That transition burns piles of cash, crushes both revenue and margins. And then meanwhile, the stock is already up around 85% this year. So what do you have here? A stock priced on the AI dream, while the numbers are about to show the mining reality. Further dilution is very likely on its way, and that could really hurt the stock going into 2027. Next up, Better Home and Finance. This might be my favorite contrarian play of the week. The entire thesis comes down to one thing: mortgage rates. They're finally moving in the right direction, and Better, with its Tinman platform, is one of the most efficient originators in the market. Where traditional lenders need weeks, Better closes loans in days at a fraction of the cost. If the refinancing wave gets going, Better is one of the biggest levers on that theme you can buy on the stock market. The next stock that is reporting their earning is called GCTS Semiconductor. GCT makes 5G chips, and shipments are finally trending upward after years of promises. Their partnership strategy with larger chip players gives them access to customers they never could have reached on their own, and management has explicitly announced a business update for this call, including their role in AI connectivity. You usually don't do that when you're sitting on bad news, but let's be honest, revenue is still small, the losses are still there, and dilution remains a real risk. This is a lottery ticket, not a foundation of your portfolio, but the momentum going into these numbers is there. I'm bullish, but only with a 2% position in my portfolio. Don't forget, if you want to know every stock I got in my portfolio at any moment, join the Discord. Next up, Nebius. And this is a tricky one, because I'm a big fan of the company, but heading into these earnings, I'm slightly bearish. The problem isn't the business. The AI cloud is growing like crazy. The data centers are running full, and management delivers quarter after quarter. The problem is expectations. The stock has run up so hard that perfection is now priced in. Any comment about higher capex, tighter GPU supply, or slower capacity expansion could trigger a 10 to 15% correction. Long term, I remain positive. But putting new money in before these numbers? No. I'd rather wait for a dip after the report. Next, we have one of my favorites, which is called I-80 Gold. Gold just started to recover, and I-80 is selling every ounce at prices it could only dream of a year ago. The company has restructured its balance sheet, the financing for its development plan is in place, and production from the Nevada assets is ramping up. At gold prices like these, every marginal producer turns into a cash flow story, and with the smaller names, the market always prices that in too late. That's exactly the gap I want to play here. For the next stock, Soluna Holdings, I'm being slightly bullish. The concept is strong. Build data centers where renewable energy is being wasted and convert that cheap power into computing. The project pipeline is growing, and every megawatt that shifts from mining to AI hosting delivers more stable, higher margins. So why only slightly bullish? The balance sheet. Soluna has to fund its growth externally, and for a stock this size, that means dilution. The numbers themselves will be mixed. It's all about the pipeline updates. You're getting the option on the AI scenario here almost for free, and with pipeline of over 4 gigawatts, the AI scenario has a ton of upside. Next, we got PAR Technology. I'm heading bullish into their earnings. PAR builds the operating system for restaurant chains. Sales, loyalty, online ordering, all in one platform. ARR keeps growing at a solid clip. Major chains are rolling the platform out across thousands of locations, and this kind of software is extremely sticky. A restaurant chain doesn't just switch systems. On top of that, the company is moving towards structural profitability, and that's exactly the inflection point where the market re-rates these SaaS names. Any confirmation of that in this report is a buy signal. And last but not least, we have Hive Digital. I'm not expecting a move up after earnings. The math is simple and painful. Bitcoin has pulled back significantly. Post-halving mining economics are brutal, and Hive is in the middle of an expensive expansion corporation in Paraguay that's eating capex, while revenue per hash keeps falling. Lower Bitcoin price plus higher costs, that's a margin shredder. Yes, Hive also has an AI and HPC segment, and yes, it's growing, but it's still too small to offset the mining quarter. I expect weak numbers and few near-term triggers for a recovery. I expect quite some more dilution for their data center expansion, and that will really hurt the stock price. So quick recap. My strongest bullish calls for this week are Supermicro, Valens Semiconductor, Gorilla Technologies, QXO, and I-80 Gold. Let me know in the comments where you disagree. I'm especially curious who wants to push back on my bearish Rocketlab call. Want the results and my analysis in your inbox the moment the numbers drop? Join the Mr. Invest Discord, link in the description. The earnings bot posts every report in there with the 5 biggest headlines, so hope to see you in the Discord. And don't forget to like the video.